Everything looks bullish. The market seems to be saying that we should be buying right now, but it doesn't really feel right. Some things don't really add up. In this video, we're going to look at both sides. We're going to look at the potential bull and bear case, how high could we go, and what could potentially break the plan. Now, Ethereum looks very bullish. And we've talked about this a few days ago on this channel. This is the two best moving averages for Ethereum. When the quicker moving average crosses the slower moving average, we've got a golden cross. That's a positive signal. When the quicker moving average goes below, though, that's a bearish signal. And here is the price overlay. And currently, the short moving average is above the longer moving average. We should be bullish. Now, what is the duration of those moving averages? We have run the back tests. The best SMA crossover strategy. Here is the result. We've got the slow moving average over here, the fast moving average over here. Following that strategy with a fixed investment amount with every signal without any leverage gives this kind of a return. Very constant outperformance over just buying and holding ETH. Introducing a bit of leverage, so roughly 2x for long and short, we can get this up to more than 400% APY. Timing the market with the 12-day simple moving average for the short term and the 33-day simple moving average for the longer term, that's historically the best for ETH. And that's outperforming buying and holding massively, and that's the bullish signal. And that should tell us that we should simply buy right now. But it's not that easy, unfortunately, because we can see in the past how we did have our bad signals with that strategy as well. Let's take away again the price. Every now and then, the short-term moving average creates bad signals. So is this another bad signal? And are we going to crash? Here's the conflicting story. This is the same analysis for Bitcoin. And for Bitcoin, we are still bearish. We are still below the best moving average. When we zoom out, we've got a long-term trading range. Now, this is nothing mathematical. Those are simply just curved lines that coincidentally connect the bottoms and the tops relatively well. But it does show us that in the worst case, if Bitcoin cannot break out, it could fall all the way to 49K. Because historically, when we fell from the all-time high by more than 50%, we tended to enter a bear market and we tended to fall below the average cost basis of the market. And that's what we see here. The average cost basis, the realized price. With every bear market, we tended to go below that. And the realized price is currently at 54K. We have not yet hit that price level and we tended to fall below it. We did not directly turn around at the realized price. In fact, we went into net unrealized losses in the past. Now, why does this matter? It matters because it's very hard to estimate the fair price of Bitcoin. When we buy, say, property or when we buy stocks, we can try to estimate the future cash flows. So the future dividend payments or the future rental income. We can take those future payments and then discount them to the present. We can calculate the present value of those future cash flows. And that's then the value of that stock of that property. But since Bitcoin does not have any future cash flows, it's simply just an asset to store value, we have to have another way to value it. And I think psychology is a pretty strong driver. Let's say you buy that house and you consider to sell this in the future for some gains. If currently the house is down, you bought it, say, at $1 million and it's now down to 800,000 and you're not in a problematic situation, you wouldn't really sell the house. You would just wait until the house recovers again, until the price of the house is above your purchase price. So your purchase price matters for the decision when to sell. There is a psychological anchor point at what price you might be willing to sell, right? You might be willing to sell maybe at your buying price or for some profit, but you're unlikely going to sell at a loss if you really don't have to. And I think Bitcoin works the same. And so looking at that reference price for the entire market gives us a good idea when the selling pressure might ease. When the average Bitcoin investor is in unrealized losses, when the current market price is below the purchase price for most investors, selling tends to slow down. And that's when bear market bottoms are formed. That's historically when we bottom out. And we are not there yet. The average Bitcoin investor is still in profit. And so again, that cost basis is currently at 54K. Historically, we even fell below the long-term holder realized price. And that's currently at 43K. It does go up over time though. So in a month from now, it might be at 44K. Maybe in the summer, in June or July, it will be closer to 50K. So this is a moving target, but again, in the past, we tend to fall below that price level. And so this is where things get a bit complicated. We've got the data-driven approach that predicted Ethereum's price development extremely well. That's currently bullish. But we've got the similar backtest for Bitcoin, and we've got the cycle structure where historically we tended to fall more. And then we've got the strong correlation between Bitcoin and Ethereum, right? When Bitcoin is going up, Ethereum tends to go up. When Bitcoin crashes, Ethereum crashes as well. So the two assets tend to move in the same direction at the same time. So something has to give here. Either the backtest for Ethereum is not right and Ethereum will not rally, or the cycle theory for Bitcoin isn't right and we might be bottoming out much earlier than most people anticipate. Now there's a resolution to this problem, and maybe both approaches are right. And the solution to the problem is the time horizon. What we see over here, that's the stablecoin market cap relative to the US money supply. And we're going sideways since October of last year. And that's also when Bitcoin started crashing. The all-time high for Bitcoin was in the middle of October of last year. And it seems like we are now getting out of that trading range. Maybe we are now expanding again. Now the expansion, the rate of that expansion, unfortunately is not as quick compared to the typical bull market. But sometimes things simply take some time to play out, to accelerate. What could be going on here is that short term we see a relief rally because Ethereum is very cheap, but then the overarching trend, the macro trend, might take over again. This is also consistent with the stablecoin dominance approach. What we see over here, that's the percent of crypto that's currently in stablecoins. So when this is very high, the market is very scared, it's very risk off. When this is very low, the market is very risk on. And so when we look at Bitcoin's price, this is pretty much the opposite of the stablecoin dominance. It might make sense to short-term sell when we are low and then to buy when we are high on the stablecoin dominance. And we've talked about this chart before on this channel, and I came up with this prediction here. And it seems to be playing out exactly as we anticipated. The stablecoin dominance is coming down, crypto prices are going up, but what used to be a resistance might turn into a support. And then we could potentially hit the 16% stablecoin dominance mark again. And that's when we bottom out in a bear market. So this is then how the situation could resolve. This is Bitcoin. We might be rallying maybe up to 88K or so, depending on how fast we go up, to then see the overarching trend taking over again and getting the final sell-off to the 50s, potentially even $40,000 mark. The long-term holder realized price again is currently at 43K. It looks like the situation is very confusing because correlated assets give us very different signals for the same kind of strategy, for trend following. Ethereum is bullish, Bitcoin is not. But we have trend followers for both assets, right? For Bitcoin, that's currently up roughly 10%. It started in the middle of October when Bitcoin peaked. So BTC lost 40% roughly. We are up. But the Ethereum vault is also up already by 38% over the last 2 months. That's when we started the ETH vault. So really it's just a matter of time horizon. Are you trading the short to medium term? So are you okay just holding a position for a few days? Or do you prefer to hold positions over several months? If you're buying now in order to sell again in a week or two, I don't blame you. But if you're buying now in order to sell maybe by summer or autumn of this year, I think cheaper prices will be available until then. Again, I don't have a crystal ball, right? I'm simply just sharing the data. I'm sharing the approaches that historically worked very well and that also have a fundamental reason why they should be working. If there is an anchor price in the market and people are actually giving up, people are actually not selling anymore because they are in unrealized losses with their Bitcoin, but they believe in Bitcoin long term, then at some point we will bottom out. But if we are not yet below the realized price, there might still be quite some risk. Short term things look okay. I am betting on rising prices of Ethereum, right? We talked about Ethereum on this channel roughly a week ago, and we made quite a bit of money with that rally. But at some point, this is likely going to turn around. We have to lock in those profits at some point. Besides the Bitcoin and Ethereum vault, we will also launch a Solana vault this week. This will be again available to the premium members. We will use the best strategy for Solana using optimized leverage in a capital pool that automatically executes the strategy launched on Gravity. But again, more will be explained To the premium members, feel free to check it out. If you got some value out of this video, feel free to give it a like. It helps the channel grow. Feel free to also subscribe. I publish videos regularly. Thanks for watching. See you next time. Cheers.